Mr. Zahra, I think we should start. We just waited 5 minutes above time. We have 50 plus participants, I think. Let's just start. It's Ramadan, maybe turn out maybe less, although we have more registrations, we know.
Yes, brother. بسم الله الرحمن الرحيم والصلاة والسلام على نبينا محمد وعلى آله وصحبه. Assalamu alaikum wa rahmatullahi wa barakatuh, and we wish you and your families a blessed Ramadan. It gives me a great pleasure to welcome you to this public hearing on the exposure draft of AAOIFI governance standard, the principles of assessment of necessity for obtaining conventional reinsurance by Takaful institutions. We're holding this public hearing in collaboration with BAB, Bahrain Association of Banks, and UBF, the UAE Banks Federations. Let me take you through the agenda of the session. It's a 2-hour session. I'll just take a few minutes for the welcoming remarks, and then our brother Omar Mustafa Ansari, the Secretary General of AAOIFI, will start the presentation and get your feedback. Then we will conclude at 3 p.m. So it's a short standard, 2 hours, inshallah, will be enough to get to present and also get your feedback. So in terms of my welcoming remark, I will just give you a brief about the history of preparing this standard. Because of certain challenges and needs in the market and also concerns that were raised to the Secretariat from certain stakeholders, AAOIFI Secretariat decided to propose for AAOIFI Governance and Ethics Board to start projects related to Takaful governance. So this proposal was presented in March last year, and the board approved the initiation of multiple projects related to Takaful governance. In July, the working group, the Takaful committee for governance specifically was formed in July, and then we held a couple of working group meetings before presenting the exposure draft to Egypt in its 38th meeting, and it was approved in September. After the due process, we issued the exposure draft by the end of last year. So this is the first public hearing for this exposure draft. We have 2 public hearings planned in the pipeline, one in English, which is expected to be by end of April, and another one in Arabic in mid of June. So in terms of the content of the standard, or why did we issue this standard? Because this is a basic question that we raise when we issue any standard or when we start the preparation and the development process. The AAOIFI Sharia Standard number 41, which was issued in 2009, state that it is unpermissible for Takaful institution to obtain conventional reinsurance unless there is a necessity, there is a need. So we understand that in this situation where the Takaful institution obtains conventional reinsurance, certain challenges and risks arise. And this is where the mandate or the work and the role of AAOIFI governance standard comes. What we want is to set principles to govern and control the risk and challenges that arise from the situations where the Takaful institution obtain conventional reinsurance. So this is just a little bit about the standard. Inshallah, after we complete the public consultation process, we will present the exposure draft with all the comments to the board and finalize it this year. In terms of this public hearing, as I mentioned, it is the first public hearing. What we have in the pipeline, we planned 2 already in the pipeline, and we will post the date sometime in social media and of course the website. In terms of this public hearing, we want to learn from your experience. We want to get your feedback, and therefore we, of course, welcome your comments in the Q&A tab. And even after this public hearing, if you feel you have more questions or more comments or more feedback to provide, of course, you're welcome to send us those comments on governance@aaoifi.com. This is it from my side. I would like now to invite Brother Omar Mustafa Ansari, the Secretary General, to start the discussion. Thank you.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you very much, Sister Zahra, for the introduction. And thank you everybody for joining us. And we know that during Ramadan, particularly the afternoon time, this is normally the cellular time. Everybody wants to take some rest. So thanks for the team, thanks for everybody. But we also had to take into consideration different time zones. So doing it early morning means that at times it is not very much suitable for some of the other regions. And additionally, the schedules have been a bit packed in between. So it was the most suitable time found. So I hope that I won't be sleeping and I won't let you sleep, inshallah. It's a very interesting subject, but little bit background. Sister Zara has provided some background, but let me take you a little bit to the background about Takaful approach of AOFI towards Takaful standards. So I would like to mention that AOFI since beginning has been for all aspects of Islamic finance industry, including Takaful, and we have developed multiple Takaful standards in the past. So there are two specific Sharia standards on Takaful, on Islamic insurance and Islamic reinsurance. There have been earlier four accounting standards on Takaful, different aspects of Takaful. Those four standards were replaced a couple of years back with the set of two standards, that is FAS 42 and 43. And we have gone through long discussions on that. On the governance side, we never developed earlier a separate standard for Takaful, although we kept the Takaful principles, governance principles as contained in our standards applicable of Takaful institutions, because Takaful institutions are considered within the definition of Islamic financial institutions that we have. So from that perspective, if our governance standards require a bank to have a Sharia board, it is in a similar manner requiring a Takaful to have a Sharia board. Similarly, Sharia compliance function, internal Sharia audit function, other governance organs, whatever are there, are required. When we were working on development of Sharia governance framework as a comprehensive document, and then it was divided into multiple multiple standards as sub-projects, during that whole process, we identified that there were certain specific aspects that were considered necessary to be addressed for the purpose of the Takaful. So a couple of governance requirements, transparency and disclosure requirement in particular were contained in the Sharia governance standard, which was issued as exposure draft in 2023 and which was finalized in 2024 and as Sharia governance framework, a new governance standard number 1, which will become effective in a couple of years after one year and a half. Considering the aspect of governance, specific governance considerations for Takaful, we at the AAOIFI Governance and Ethics Board decided that we'll be doing some projects for that, and this is first of the projects. In future, what we are doing, what we expect to do on the governance side, let me summarize quickly. On the governance side, we are expecting to have a standard on surplus and deficit management, for which we have already started the preliminary study work. Preliminary study is already in advanced stage now. Hopefully, it will be inshallah. Inshallah, it will be developed like exposure draft. We plan, I think, that by end of this year, we want to have the exposure draft, and by next year, we want to have this finalized. Then in future, inshallah, we expect to have a overall Takaful governance standard as a whole that addresses overall governance principles which are contained in AOFI's governance framework. And we would like to align those and specify more specific requirements with regard to Takaful. This is on the Takaful front on the governance side, but on an overall basis, as AOFI, we are working significantly now towards Takaful. We feel that Takaful has been a neglected segment within the Islamic finance ecosystem. Obviously, it is much smaller in terms of size than Islamic banks, and additionally, it is smaller than even the capital markets, particularly Sukuk as well. So from that perspective, it is not strong enough. Secondly, with regard to Takaful, there are multiple models in the market for Islamic insurance, which makes it a bit more complicated, because then the pure AOFI compliant Takaful segment becomes even smaller. So the largest one, like Saudi Cooperative Insurance, may not be fully compliant with the AOFI Sharia standard. The Madarba-based models as prevalent in certain countries may not be compliant. So this is another area that Takaful is a bit more segmented as well. And while there were a few models, but we recently saw additional models coming up, like Turkey coming up with the Tasir model, as a bit a different model of Islamic insurance as approved by their respective central Sharia body. Considering these things together, I can, okay, if the sound is echoing, I just received a message. Let me try to switch to another mic. Let me just try to switch it off and see if it works better. Can Brother Imtiaz Abbas Hussain or anybody else, can you confirm if the voice is a bit better now?
It's fine for me, brother.
Yes, brother, same.
For some people, it was even fine earlier as well, because I have been using this one. But if it is better, then it's okay. I'll use this mic. So let me continue with this one. So, okay. Thank you very much. Thank you, everybody, for confirmation. So, on the Takaful front as a whole, now we feel that this is a segment that needs more support and attention from AOFI from all angles, which means that standard development, standard implementation support, capacity building, not only this, advocacy and awareness, and even the market strategy related support, whatever we can do at the regulatory level, at the industry level, we need to work on that. So from those perspectives, as I mentioned, we recently have developed FAS 2042 and 43, but we have started working on illustrative financial statement formats for Takaful, and we are also thinking of coming up with some additional guidelines if needed. Similarly, on the capacity building side, we have already initiated the project of coming up with a dedicated certified Takaful expert program like our SEPA and CSAA programs. And we hope that this program will help the industry having access to the right people who are well trained in different aspects of Takaful, including the business model, including the Sharia accounting and governance standards, etc. as well. So this is going to be a comprehensive program, inshallah, which is already initiated, and we are in the we are in the process of preliminary planning of the curriculum and everything. In addition to that, at the AOFI level, at the accounting board and governance board have established their permanent committees for Takaful to have access to the global best experts from from different segments, including scholars, including academia, including professionals, practitioners, CFOs of Takaful, etc. So these committees are actually more like, instead of working groups, these are more like permanent sort of committees who would be coming up with the standards for the board to review, as well as they may come up with like some sort of interpretations and technical releases, etc., as well as and when needed. For example, as I mentioned about the illustrative financial statements for Takaful. At AOFI's overall strategy for this Takaful business, we have also established overall AOFI's advisory committee that will strategically guide AOFI towards the right course of action for supporting the industry. I hope that all the participants from the Takaful industry who are here today and the respective Takaful regulators, they will be able to get benefit from the new activities that we are planning. I thought that it would be good to just have a touch this subject about these initiatives, which are very important. And shortly, we will be approaching the regulators for a more specific Takaful footprint report as well. And maybe a couple of impact assessment reports will also be developed for Takaful related standards. So this is the background. So what you can expect on the governance side, now to summarize, that this is the first governance standard that we're planning on the Takaful side. Next, probably you will be having a surplus and deficit management, which will include qard management as well, because qard management is a means of deficit management. So probably qard management will be part of that one as well. And then probably there will be a more comprehensive Takaful governance standard addressing the general aspects of Takaful governance. So this was the background about whatever activity that we are having. Now coming to the more specific background of this standard before I take you through the standard. In a nutshell, Takaful is a small industry, and being a small industry, considering the business model of insurance, which is significantly dependent on reinsurance and the risk sharing between the industry participants. So, from that perspective, this has always been a challenge for the Takaful industry. In some of the markets, that there is again a reasonable amount of retakaful business available, either through proper retakaful entities or through a retakaful window of a conventional reinsurance entity. But there are certain markets where no such support is available, and they have to cede the business to outside of their jurisdictions. This is one of the areas which is very weak at this point of time, particularly if the takaful is weak, Islamic re-takaful is even weaker at this point of time, considering the market size, considering the opportunity of growth, etc. At AOFI, we believe that growth of Takaful sector is very important for the overall growth of Islamic finance and Islamic finance ecosystem and the Islamic economic system as a whole as well. Because Takaful is the tool that provides an entrepreneur or even individuals at time to take risk on assets, without which moving the things on right direction is not possible. So, for example, if appropriate takaful coverage is not available, Islamic banks may not be able to finance the enterprises, the entities, corporate entities, SME, whatever type of entities they are, even the retail business, for example, even the leasing, car leasing or house financing under Sharia compliant modes, nothing would be possible if appropriate takaful coverage is not there. In the absence of takaful, yes, we all know that the banking industry is allowed by scholars, even by official standard, that in the case of necessity, obviously that can be obtained, but that conventional insurance can be obtained, but that is not the subject of our discussion today. Although the analogies that are applied in this standard should also be generally applied by the banks when they opt for a conventional insurance instead of takaful, or if they feel that they have to have a necessity element for the purpose of acquiring conventional insurance in the absence of or due to weak segment of takaful in the respective jurisdiction. So same analogies can be applied, but again, that is not a subject of discussion for today. Obviously, it can be a subject of discussion at a later stage or point of time. Maybe we may need to come up with a standard on that area, or we make maybe a guideline that these analogies may be applied. But as a general rule, the analogies of application would generally be the same, not exactly all of them, but the main analogy of how to assess necessity might be the same for these situations as well. Now, this issue has become more significant in certain countries where the kaful business, when it started, it had significant access to, like, conventional reinsurance based on permissions of the respective Sharia boards, because no alternate options were available. But with the development of the segment over a period of time and the development of certain re-takaful entities available, and again, it may be a chicken and egg situation. So if everybody in the takaful industry goes for conventional reinsurance based on necessity, why on earth anybody will actually establish a retakaful entity? So the question is, there is no retakaful entity because there is no business. There is no business because all takaful entities are allowed by respective Sharia boards. I'm just taking it this as an analogy, as an example only, that since nobody is actually asking that, okay, I will not go to conventional insurance because it is haram. The point is, at times, some of the harams become, acceptable norms. So this is a situation where in different markets, these issues came up. We were aware of this thing happening, but more recently in Pakistan in particular, this issue came up more significantly, and there was some debate in the market, and the regulator also had to take certain steps with regard to allowing some situations of necessity and at the same time keeping controls on that part. So from that perspective, we felt that it is a right starting point to work on the takaful governance, because again, as I mentioned, that we have to develop multiple standards on Takaful governance, but we felt that this is the right time to start with this one. Just a question and a request with everybody that if you have any questions, please put them in the Q&A tab. So as of now, I can't find any question in general about AAOIFI's overall strategy, about Takaful as we mentioned, and what steps we are taking. So any suggestion, any question about that, please feel free before I share the screen and take you through the standard. Okay, I can't see any comment coming up now. So let me just share my screen and move ahead. Can you all see the screen? And is it moving? Just to confirm that the screen is moving?
Yes, brother, it's moving.
Okay, so you can see the full screen.
There are notes on the slide. It's
Sorry?
not. There are like notes.
You are not seeing the full screen. You are seeing the that is the point. Okay, let me try to resolve this thing. Just a second. This is happening because I'm using the mic from my laptop. I think there is an issue of screen sharing on this part. So let me just try to do the sharing again. I hope this time I'm able to share properly.
Inshallah. Yes, it's
now,
better.
I hope that you can see the full screen now.
Yes. Can you?
Can you see now?
Now, yes.
Okay, now the full screen is moving.
Yes, now perfect.
Okay. Okay, so I'll not repeat what the things which are generally there on the preface and introduction. We just talked about a few things, maybe like, the rationale and other things. Even before me, Sister Zahra talked a little bit about that. So I'll just skip the preface and rationale part and the introduction part. Let's start from the objective. The objective of this standard is to provide core principles under which a Takaful institution may avail conventional reinsurance in the event of necessity. Standard shall be applicable to all Takaful institutions, including window Takaful institutions needing to avail conventional reinsurance in the event of necessity. This standard shall also apply to re-Takaful institutions and co-Takaful institutions which further reduce their risk by opting for retrocession conventionally, subject to the extent suitable to their business model and the approval of an exemption granted by their respective Sharia supervisory boards. So if there is a re-Takaful institution or co-Takaful institution that is applying retrocession through conventional means, it means that they are having a retrocession with another insurance company or a reinsurance company on a conventional model, then still this will apply for consideration of necessity part. Para 4 is talking about a unique situation because there are some of the Takaful institutions that do not, Takaful or cooperative insurance, etc., that do not follow AOFI compliant model. So they may not be considered AOFI compliant model for the purpose, but this standard clarifies that conventional insurance does not include. So if you are not following AOFI Takaful standard, it does not mean for the purpose of this retakaful that you are not within the mandate. So for example, there is a takaful company based in Bahrain. That takaful company follows the wakala model, which is acceptable as per AOFI. And then it wants to have a reinsurance, retakaful through a retakaful entity based somewhere else, which follows the mudarba model, which is not acceptable as per AOFI, or if in case it wants to refer to a retakaful, a reinsurance entity which works on Saudi cooperative reinsurance model. The purpose of this paragraph is that considering that even if that entity may not be following AOFI Sharia standard, but if it is following a takaful or cooperative insurance model, which is considered to be Sharia compliant by the respective Sharia board, that is not considered within the scope of this standard, which means that if there is a Sharia board resolution, and in case of central Sharia board of the respective regulator, the central Sharia board resolution is available. In those situations, it will be considered as a compliant retakaful business, which means that the requirements of this standard about determining necessity, etc., will not be applying in these cases. Do we have any comment or question here? Okay. Okay. There is comment from Dr. Huda Shafi. Is Saudi Arabia apply and as these are very keen to be Sharia in everything. First thing is Saudi cooperative insurance model is overall considered to be Sharia compliant according to scholars fatwa that they have on an overall basis. It does not necessarily apply UFI Sharia standard, which requires a wakala model and which does not allow the surplus, any portion of the surplus to be taken to the shareholders. While in Saudi cooperative model, a portion of surplus is taken to the shareholders as well. And that is the reason that we are saying that it does not apply with AOFI Takaful standard. By no means I am taking a plea here, or I'm taking a view here that those are Sharia non-compliant. We are simply saying that those entities which are not following AOFI Sharia compliant model, but they still have a fatwa of Sharia compliance from their respective bodies, may be considered compliant if there is a Sharia board opinion and central Sharia board ruling available in this part. And in that situation, they will not be considered conventional, but they will be considered takaful. There is a comment from Pritam Lami. Day-to-day challenges for takaful operator, limited retakaful carrier. The retakaful industry in comparison to the conventional insurance industry is still quite small, and as such, there are numerous challenges that industry grapples with in trying to expand in geographical footprint. Limited capacity. With the limited number of retakaful operators, the capacity available is not sufficient to meet the demand of the takaful operators. The credit ratings of most of the conventional insurers are strong, which give them an edge over the retakaful firms. I think you are absolutely on spot, and that is the reason for this standard I would like to mention. Thank you very much for raising this very good this very good comment. Inshallah, as I take you through the standard, you will try to find answer to each one of the issues that you have raised, inshallah. Dr. Huda, you are most welcome. Dr. Munir, Assalamu alaikum. With regard to the term used in case of necessity for using conventional reinsurance to be considered, does this term has certain predefined parameters, or it is purely based on judgment of SSB or of respective institution? Dr. Munir, Assalamu alaikum. Thank you very much for being with us. We have defined necessity in this standard, and obviously that has to be defined in the pretext of this standard in line with the requirements of this standard. But obviously there has to be a judgment call that needs to be taken. This standard is all about this thing that judgment call should be based on a proper evaluation process, governance and management controls rather than hunches. So for example, if you are the Sharia, if sitting in a Sharia board of a Takaful entity, I can just come to you and say as management, sir, it is very much necessary for us to take it. Now, necessary as management defines how Sharia board establishes and decides that this is yes a necessity. This is what this standard is all about. We are trying to establish governance processes and controls to establish this thing in a way that this issue is resolved as much as possible. So as we go through this, inshallah, you will find the definition and other significant aspects that we need to consider. There is comment from brother Abdullah Masoom. Assalamu alaikum and welcome, brother. Thank you very much for joining in. Assalamu alaikum. If AAOIFI doesn't allow the Mudarba model, then how it will be considered for re-Takaful? However, the Takaful is following the AAOIFI model. That was brother Abdullah Masoom. Thank you very much. Actually, you raised a very good question. So let me try to clarify. This standard was about re-Takaful versus reinsurance. If you ask me, for us, if we just stick to the core definition of Takaful and re-Takaful that AAOIFI has, then it means that Saudi cooperative, even if they have a Sharia compliance fatwa or a Malaysian Mudarba-based re-Takaful, again, now a lot of entities in Malaysia are now Wakala-based, but still Malaysia and certain other parts of the world, you still have a Mudarba model. Or in some situation, you can have a Wakala model with a surplus sharing bonus, which is not allowed by AAOIFI standard. So our question here was not to determine what is the halal and haram, because that is the debate of the Sharia board. AAOIFI Sharia board develops the Sharia standards. AAOIFI Sharia board says you can take it in case of necessity. In the governance standard, we are just trying to define the controls and processes that you establish to ensure that necessity is determined through a proper mechanism and not just by hunches. So this is brother Abdullah Masoom, this was our first question, that any of the entity that is not following AAOIFI Sharia standards in full, shall it be considered conventional reinsurance for the purpose of this standard, or shall it be considered Takaful for the purpose of this standard? Because if we considered it conventional, still it may need to be given a priority over pure conventional reinsurance. However, considering the views of different scholars and fatwa that we have seen in different markets, we decided that it will be considered Takaful if there is a Sharia board fatwa and central Sharia board ruling available for that. Now, brother Abdullah, if you recall, as per AAOIFI standards, we always say that you have to follow Sharia principles and rules, and there is a hierarchy of Sharia principles and rules. And that hierarchy of Sharia principles and rules starts with AAOIFI Sharia standards, then central Sharia board rulings, and then there are, like, country Sharia regulations, central Sharia board rulings, financial accounting standards requirement which are related to Sharia, and the Sharia supervisory board ruling. So considering the hierarchy of Sharia principles and rules, we considered that if the central Sharia board evaluating the business model of the counterparty and the Sharia board and the central Sharia board, they approve it, then we should not be saying that it is equal to conventional reinsurance. Yes, for sure, Sharia board, well, they will give the ruling, and the central Sharia board, when they will give the ruling, they will define the priority. But we do not want to determine something impermissible here according to our governance standard, which is approved by the Sharia Supervisory Board and the Central Sharia Board of the respective country. So, because here our mandate is governance. So what we did, we simply excluded it from the scope and we said that it will not be considered a conventional reinsurance. So here we are talking about conventional reinsurance. So about taking Takaful coverage, re-Takaful coverage from a non-AOIFI compliant Takaful entity, we leave it to the decision of the SSB and the Central Sharia Board. I hope, brother, it will be clear. However, as a whole, this is the view which is followed by majority of the Sharia boards that we have seen. Their priority is always that you go for AOIFI compliant, but then if AOIFI compliant is not available, you can still go to a Takaful or cooperative insurance, which is considered to be Sharia compliant and has a Sharia compliance fatwa available. We have a comment from brother Shakib Mahmood. Does necessity include getting better terms from conventional reinsurance? Brother Shakib, you have nailed it. So yes, we have discussed this issue. From our perspective, rate should not be primary consideration, but let me take you through the standard to find a very clear answer to your question. Inshallah, you will find that. Brother Sayyid Imtiaz Abbas Hussain, Assalamu alaikum and welcome, brother. Quran also allows haram to be eaten in extreme situations, but I think Takaful is not facing extreme situations. Why not Takaful do re-Takaful with medium-sized Takaful instead of looking for giant reinsurance companies to share huge coverage to mitigate huge possible losses? Thank you very much. Thank you very much. Actually, this is the whole purpose of this standard, to determine what is necessity. Brother Imtiaz Abbas Hussain, necessity for us is that we want Takaful to be available to a common man, a Takaful to be available to businesses, Takaful to be available to Islamic banks to ensure that their underlying assets of their transactions are properly covered. Takaful is necessary to support the industrial development, economic development. Takaful is necessary for agri financing. Without Takaful, you cannot do any agri financing unless you have crop Takaful available. So these are the things which are merely a necessity to make them available to the market. Now, for that, you need Takaful entity. Once Takaful entity is done, in order to make the Takaful system work, a single entity cannot take that risk. Takaful cannot work that way. And this is where the question of reinsurance with re-Takaful with the re-Takaful entities come up. Here is the question where how we put the boundary with regard to the necessity. Our governance standard is not a replacement for Sharia standard. If Sharia standard says not allowed at all. If a central Sharia board says we don't want to allow it, it's okay. But what we are saying here is only when the Sharia board says that it can be allowed in case of necessity, the Sharia standard of AOIFI says it can be allowed in necessity, then for the purpose of determining that necessity, what controls and processes should apply. So thank you very much, everybody, for your very important and relevant comments. I think this is going to be a very good discussion, inshallah. I hope so. So let's move ahead with the discussion. Relationship with other standards. This standard is built upon AOIFI Sharia Standard 41 Islamic Reinsurance and as Sharia Standard 26 Islamic Insurance. It shall be read in conjunction with and interpreted and applied only in the light of the requirements of these two standards. So it is very clear that our governance standard in no way is going to challenge anything or even from Sharia point of view, we don't want to add anything from Sharia point of view. We just want to put the governance and control requirements so as to determine how it would be done. Just to for the benefit of audience, I would like to take one minute just about the correlation of the governance standards with Sharia standards. So as AOFI, when we develop our governance standards, our primary objective is to ensure that the Sharia requirements and the business model of the Islamic financial institutions is reflected in the governance mechanism. And then we put the governance and management related controls and the responsibilities with regard to fairness and fiduciary responsibility that we talk about for the benefit of the stakeholders. That is what we embed in the governance system. So governance standard is always one step ahead of what we have in the Sharia standard. At time governance standard, because we are developing these are the governance and ethics board of AOFI. So our governance standards always have an ethical element attached to that. At times that ethical element also considers some of the maqasid sharia elements. So considering all of these things together, the purpose of the governance standards is to add on to the ecosystem that is developed by AOFI Sharia standards. So this is something which is not primarily Sharia, but without having these requirements, you cannot ensure implementation of Sharia. So the governance standards ensure that Sharia principles and rules are implemented in their true essence, and the control and governance environment is conducive for that. And in this process, the ethical values and the fiduciary responsibilities are fulfilled appropriately. We have comments from Mahavi Ismail. Suppose that there is a unit within an Islamic bank operating Takaful. How can benefit from the standard? Thank you. Thank you. Thank you very much for being with us. This is actually normally Takaful unit is normally not allowed, but there is one thing in Takaful in the Islamic banks that can be relevant, because there are some of the Islamic finance products that require a reserve mechanism, and that reserve mechanism is similar to insurance or takaful in certain aspects. So from that perspective, if the nature of the reserve or nature of the product is similar, then obviously the same need to be applied. So this is, I think, my general comment. More specific comments can be based on very specific questions that we get about the real life example. Thank you very much for being with us. Brother Shakib Mahmood has a point. Takaful has many restrictions as is it. Our investment return is half of the conventional industry. If you put a strict governance standard for Takaful, how will you promote and make Takaful a commercially viable industry? People should be attracted toward Takaful by offering better rates and products. Brother Shakib, thank you very much. Actually, and this is where we have to create a balance between what is halal and haram. So, for example, those of you who attend our public hearings on a regular basis know that I personally have a quite strong view against, for example, takaful. But, tawarruk. My apologies. But the point is, tawarruk is still, okay, you may be, if you follow the principles, then tawarruk is still, irrespective of being less preferred mode, is halal. It is less preferred mode. So just assuming that you are fulfilling the requirements contained in AOFI Sharia standard, that there is a genuine four-party transaction and all that. So even in case of tawarruk, even if it is less preferred, but it is halal. But when it comes to reinsurance, brother, it comes to haram. So the question is, Brother Shakib, let me take an example. Other way around. There is a takaful company that shows to the counterparty participant, we are doing halal, we are takaful, we do a takaful business, we develop a takaful policy for participant membership document or whatever we call, we do it for you. And we are all halal. On the back end, 800% cedes the business to conventional reinsurance. Now, Islamic finance here is just being used to make fool of people. I'm sorry to say, it can be argued like this. We know that this has been an issue with Islamic banks as well. At times, we have seen Islamic banks taking low-cost deposits from the market because a common man would generally be attracted towards Islamic finance in Islamic banks. They take the deposit, they pay them less returns than conventional, and then pass on that whole fund to the conventional through commodity murabha. We have seen this situation in so many different countries. It is still happening in a large number of countries. Still, Islamic finance, significant amount of assets are passed on to conventional. At times, these are Sharia wrapped to invest into conventional securities. So the point is, on one side, yes, I fully agree with you that yes, this is the issue and the standard should not be very strict. And on the other hand, there is the issue of trust and the issue of the real nature of the Takaful business. So we need to keep a very delicate balance, my dear brother. And this is where we would love to have more comments from your side, that wherever the standard is, because right now your comment is a more generalized comment about having a very strict standard. But when we come to the individual discussion points, you might be in a better position to comment to us for the benefit of the Takaful Governance Committee and the Governance and Ethics Board, that they can understand where and how the standard is very strict or more strict, and how we can make it a bit more flexible and still keep that thin balance, thin line and the delicate balance between halal and haram, maintained. Because one part is very clear for me. At times, I personally feel that instead of just making fool of people by showing them a bunch of documents in front and doing on the back end what exactly the conventional is doing, I think, at times, at times, what Allah, I'm not saying it's about Islamic banks, but like, that maybe munafiqeen may be in the worst part, even worse than kuffar. So it is bad to do conventional business, but it is worse to do conventional business and showing the name of Islam only. So keeping that delicate balance is a very crucial part. And as I always say, at AAOIFI, we start our all standard setting process with the notion that Islamic finance is different. And Islamic finance has to remain different, and it has to be managed in a way that managed, reported, controlled, all these things should be done in a way that we maintain the sanctity of Islamic finance. Brother Shakib, my apologies for my comments if you feel these are very harsh. I'm just showing you the other angle, and I'm saying the purpose is just to keep a very delicate balance and that thin line maintained that takes us from halal to haram, because unlike tawarruk or unlike certain other conventional products that we don't like, but at least they are halal. It's same like I mentioned in the last slide about, a Takaful model, which is not fully compliant with AAOIFI. I may not be considering it fully compliant, fully perfect, but I may not be saying that it is completely haram, God forbid. Because yes, we can have differences of opinion on those parts. But coming to insurance, pure conventional insurance, something which is haram for the participant is haram for the insurance company as well. Something which is haram for a participant individually is equally haram for the insurance Takaful company to do it collectively for all the participants. So this is something where we have to keep this balance. We try to do it, but we will for sure learn more from you when we go to the more specific requirements of the standard and learn about very specific, like, eventualities that can be addressed in a better way. Brother Anas Ibrahim, in Nigeria, we have 5 registered Takaful, and their combined capital risk retention is not half of one conventional insurance. Most of the business they underwrite are through co-insurance arrangement, especially special risk business, and these special risks are reinsured by the lead underwriters who in the international market because of limited capacity in Nigeria. Brother Anas Ibrahim, thank you very much for a very valid comment. Yes, we know these are the practical considerations. These are the issues. We need to find solution.
Is it okay for the Takaful companies to continue to participate in these businesses? Brother Anas Ibrahim, this standard exactly provides you the means how you determine it. So I cannot answer. You need to apply the processes and the steps provided by this standard, and then you find out the conclusion. Brother Sayyid Imtiaz Abbas Hussain, to make newly born Takaful giant like conventional insurance, it is necessary that Takaful do re-Takaful instead of looking to the reinsurance entities. So it is how Takaful entities will grow. Brother Imtiaz, your question, I think it's a bit in question form. So can you more explain your question a bit, please? My apologies, I may be missing the point. Brother Ayaz Wase, Assalamu alaikum and welcome, brother. How do we need to approve Takaful when we know it is done with for profit or just a paper chase? Again, all Islamic finance is a step towards finding a solution, not an ideal solution. Same applies to Takaful. If Takaful is done in a proper way, and I think that our upcoming standard about surplus and deficit management will try to answer some of the aspects related to that, then I believe that it would be very, very important that we try to, to find the right way of doing Takaful, not only, how to put it, not only by, doing the paper chase. We have comment from Brother Nawaz Badruddin. As per AOIFI, reinsurance is permissible under certain conditions. How does the AOIFI speak about the accounting part of it as such commission received from reinsurance, which is haram? Because as per IFRS, it has to be recorded as commission. So what is the stand? Brother Nawaz, thank you very much. Again, IFRS does not have solutions for Islamic finance. If you go to AOIFI standard does not allow you to take commission from reinsurance. However, it allows you to take discount on premiums from reinsurance. So actually, conventional reinsurance, you should be changing the model if necessary, in case of necessity. I think we have addressed this issue in this standard as well, but that is clear in Sharia standard as well. This is also clear in accounting standard, because accounting standard says that that part comes into PTF, and the solution is that you don't take commission from reinsurance, rather you take a discount in the discounted price from them in the reinsurance premium rather than taking commission. But yes, you are right, absolutely, that if it is a commission and it goes to the fund, it is haram. We have comments from Pritham Elame, specialized products, for example, bankers, blanket bond insurance, cyber insurance, performance bond insurance, this. You have given a lot of examples. So all of this are, etc. Retakaful market are either not available or having lack of infrastructure. Thank you very much. Your points are all very valid, and I would suggest that we have an answer to this one. So let me take you through this one, because we have suggested a different model for new products and special risk products. Thank you very much. The standard talks about that. Okay, so let's move to the next part about definitions. Necessity. Let's first go to the most important definition, that is the necessity. Necessity in the specific context of this standard refers to the temporary time-bound necessity to obtain coverage or an extent of coverage from conventional insurance by a Takaful institution in order to manage the liabilities of the participant Takaful fund to safeguard the greater interest of the participants at large, provided that it is not solely or primarily representing the commercial considerations of the institution, such as to increase market share or the profit of the institution. And it applies when and only when the Takaful institution has exerted all reasonable efforts to avail re-Takaful coverage under Sharia compliant modes. So two main conditions. First is, primary condition should not be only commercial consideration, but the primary consideration should be to safeguard the participant's interest. So it should not be happening that I take more and more conventional reinsurance, and I take, like for example, I take more and more insurance the couple business from participants, and I cede it 100% to the reinsurance just by increasing my share and making my more profitability. While I know that this is not an insurance business, this is technically an insurance brokerage. I technically become a broker for conventional reinsurance. Something like this, which is inappropriate practice and which promotes conventional as compared to Islamic, is something that should be avoided. Parchment Takaful fund definition is coming from the FAS 43. I would prefer not to repeat all the definitions because time would be limited. So I'll be skipping some of the definitions, but for sure we can take the comments. Reasonable efforts is a very important point because we talked about exerted all reasonable effort. Reasonable effort in the specific context of this standard refer to all possible effort in the normal course of business without incurring significantly higher cost, while not ignoring any possible opportunities in line with the requirements of this standard. Now, the point is significantly higher cost. The term significantly higher refers to a percentage of 33% or higher, and where surplus is shared, its net effect shall be assessed. Determination of this percentage shall be subjective and based on due consideration of the need as decided by the SSP. The plea that we have taken for 33% is the same plea that is taken by AAOIFI Sharia board in certain matters like screening criteria, etc., based on the hadith that Athulus Kathir, that is analogy for a lot of matters. So when we say significantly higher, we applied a 33% criteria. So the cost effect, if it is within 33%, it should be there. But if the surplus is shared, I can tell you that since it reduces the shared surplus, so the net effect more than 33% would be much less. So the rate-based consideration should be taking into consideration this aspect as well, including without incurring the significantly higher costs. Reinsurance definitions is also coming from FAS 43. I don't want to repeat it. Takaful definition also coming from FAS 43. Takaful definition coming from FAS 43. Takaful institution definition, Takaful operator definition. These are also coming from FAS 43. So I'm not repeating those definitions which are already according to established AAOIFI standards. But if anybody feels that they have a comment on these definitions, please feel free to provide those comments now or later. Now coming to the core principles of for determination of necessity. So obtaining conventional reinsurance is impermissible for Takaful institutions, full stop. This is the main core principle. We need to understand that it is haram activity. So if it was haram for the participant to go to conventional insurance, it was equally haram for you to go to this one, unless there is a necessity element established according to Sharia principles and rules. So just try to understand this point, that on one side, I'm saying to the participant, don't go to conventional because that is haram, and get your business to me. Although I will pass on all your business to the conventional. Effectively, in some of the markets, we have seen the situation that retention ratio is minimal. And since retention ratio is minimal or zero, so at times even conventional insurance and the Takaful institution, both are actually working only as an agent of a larger insurance company. So this is the irony of the matter, that if you also retain zero and pass on to conventional insurance, and if the conventional insurance is also retaining zero and passing it on conventional to them, so effectively both of you are working as their agent, only you are making different papers. About necessity. So accordingly, Takaful institutions shall procure Takaful coverage only under Sharia compliant arrangements. According to these paragraphs of SS 41, we have created a cross reference that it can be done only in case of necessity. So then we come to fundamental, notwithstanding the generality of paragraph 7, obtaining conventional reinsurance may and shall only be allowable in case of temporary time-bound necessity. So first thing is, necessity is not a lifetime thing. You say that, okay, it is necessity and it will remain lifetime. No, if you get into haram, what is Sharia fatwa for normal? That you need to get out of it. So for example, if you don't get a halal job and you by chance get into a haram job, What is the Sharia approval for that? It's a lifetime approval. Or what is required? Required is that you can use this one till the time you don't find the solution, and in the meanwhile, you need to do a continuous effort to find a solution. So that is the reason that we insist on that this necessity element is not a lifetime element. It is a temporary and time-bound element. As determined in line with Sharia principles and rules and the requirements of this standard, such approval shall be granted by the SSB of the Takaful institution on a specific time-bound case-to-case basis in line with the requirements of respective AAOIFI Sharia standards and the principles contained in this standard. Exhausting all possible Sharia compliant options first. Procuring conventional insurance is haram and may lead to breach of trust of the common participants of Takaful institutions and the Takaful industry, in addition to being a significant reputational risk. Therefore, the assessment of necessity shall be performed carefully on a prudent basis, and conventional insurance may only be resorted to after ensuring that all possible Sharia compliant options have been exhausted. In no case, difference of rate. Now there are individual points very important. In no case shall the difference of rate or other similar commercial considerations be the sole or primary justification for availing conventional insurance via Takaful institution. So if I go to an Islamic bank and it charges me more on housing finance, would it become halal for me to take housing finance from a conventional because it charges less? If it doesn't apply in case of an individual, how does it apply in case of an institution which claims to everybody that we are Sharia compliant? So fundamentally, the rate or similar commercial consideration, and the commercial consideration refers to relatively high cost of re-takaful compared to conventional insurance, and not the financial viability of the re-takaful institution itself. So if the re-takaful institution is not financially viable, that may be considered an element. But if it is only a rate difference, and we talked about that significant element as well, and particularly if you have the surplus distribution mechanism as well. So effectively, it will reduce the surplus distribution. So from all those perspectives, it would be more appropriate that you still resort only to the re-takaful and not go for the conventional insurance. Effect of rating. Now, rating effect, I can see that these questions were there. So rate is the first element, and we say that rate should not be the primary or sole justification. Effect of rating. When a re-takaful option is available with re-takaful institution having a rating less than the desired rating, a decision to revert to conventional insurance shall only be taken strictly after considering the following factors. A, where the rating of such re-takaful institutions are not within acceptable limit as per regulatory requirements, and if exemption from such regulatory requirement is not possible, conventional insurance may be obtained strictly on the basis of necessity. Let me explain one more part that is there in the footnote. In the context of this standard, the term less than desired rating refers to either a direct restriction as a minimum allowed by the Regulatory and Supervisory Authority RSA, or an indirect restriction within what is permitted by the RSA but increases the solvency requirement. So both will be considered from that perspective, considering very carefully. So you cannot just blindly go and say that it is necessity, but you need to evaluate the rate factor, you need to evaluate the rating factor. The second part of the rating factor, where the rating of such re-takaful institutions are less than the desired rating, but within acceptable limits as per regulatory requirements, or where exceptions may be possible by the regulator, conventional reinsurance shall not be obtained. So even under desired rating point, if it is acceptable, because it's issue of halal and haram, again, we need to understand, it's the issue of halal and haram. It's not issue of preferred and less preferred. So considering the issue of halal and haram, if the regulatory restriction is not there or less than desired rating, regulatory restriction is not there, then in most situations, you should go for lesser rating. However, there are certain other elements that we need to consider. In the event the decision has been taken to take conventional insurance instead of re-takaful in line with provision of paragraph 11 in the best interest of the participants, it is preferable that the conventional insurance company has a reasonably better rating as compared to such re-takaful institution. So you just have a notch difference in rating and you say, no, it has a lesser rating, we will not go with it. No, it need to be a significant rating difference. So you are saying, okay, this one is double B, I want to go for triple B, or it is A, I want to go for double A. This should not be the like a little bit, one notch difference or a very little bit difference in the rating should not be a justification. I can see a couple of questions that are here. Brother Farhan Farooq. Assalamu alaikum and welcome, brother. Islamic banks require international treaties and arrangement for enlistment purposes, and they do not solely rely on retention limit for several management reasons. Will this approach be considered a Sharia necessity, and it ensures that the bank's operations are conducted in a manner that is compliant with Islamic principles and values? Brother Farhan, in bank, it will still be a bit acceptable because in case of bank, if there is a haram income, you can exclude it. So in bank, it is easier. But in case of Takaful, it is not only about you are keeping a balance with a haram institution. It is about you are passing on full or part of your business to them. So it is not only keeping a balance or keeping one single transaction or some of the things where you are stuck with, like, the mechanism of international trade laws and remittances related issues, or keeping the nostro accounts, etc. It is much more than that. So it is not just about keeping a balance or doing a transaction. It's about the whole business model. So in case of Takaful, it is the whole business model. In some situations, actually, since the retention ratio is much less, so effectively, you are just passing on the business. So yes, in case of banks also, obviously, the Sharia boards have to see item by item and case to case if they need to approve any exception to halal deposits and halal transactions. But that it does not mean that you are completely changing the business model. While in case of Takaful, it completely changes the business model. I hope you can understand our plea on that part. Brother Nawaz Badruddin, again, since Takaful marketing are shrinking, how do we move forward? Also, the non-Islamic state has conventional regulatory framework which has rating issues. In such case, how do we take decision to proceed for insurance? Now, I can tell you, you allow Takaful companies to go for conventional insurance, limit little bit remaining Takaful will all die soon. Because if they are not in demand, why they exist? The market will shrink more and more. Actually, as the Takaful business grows, you need to find more ways. Actually, the standard suggests other options also for risk sharing. If conventional is available, even co-Takaful and other options should also be considered. Brother Farhan Farooq, I'm asking that this bank requirement will be considered as Sharia necessity. Yes, to some extent, but obviously it will be decided by the Sharia court. Thank you very much. Pritham Elami again, in Oman, we have only 2 Takaful insurers for co-Takaful arrangement. However, several times we have to work with conventional insurance in local market to place the balance capacity. Thank you very much. Very good point. I think I will have an answer to this one, so I'll keep this question open. Going forward, I'll find the answer. In the event of decision has been made, sorry, I think this is already discussed, so we move ahead. Obtaining Takaful coverage should be preferred even if the Takaful institution has a lower rating compared to the available conventional insurance options, provided that rating of such Takaful option is within the risk appetite of the Takaful institution in the absence of any regulatory requirements. Sister Zahra, here,
Yes,
just
Brother
there is a typo error. After institution, there should be a comma and I should be small.
Yes.
Okay.
Just started.
So in the absence of a regulatory requirement, so for example, Takaful institution risk appetite is, for example, rating is like, for example, triple B or double B, B, and conventional is having A rating, but Islamic is having, Takaful is having within B. So only by virtue of having a better rating, you will not go for it if it is within the risk appetite, particularly if there is no regulatory requirement. If there is a regulatory requirement, then what we have mentioned in the paragraph above will apply. Now coming to a fundamental issue, and this fundamental issue is the key to understanding the business model. A Takaful institution in no case shall work just as a conduit for conventional insurance or reinsurance. A Takaful insurance shall ensure a minimum extent of reinsurance with conventional insurance companies. Such minimum extent shall be commensurate with the regulatory requirements for minimum insurance coverage for the specific insurance business where applicable, and B, the Takaful institution's strategy considering the regulatory requirements related to solvency and capital maintenance. So if okay, this will not apply, let me read it all. Accordingly, a Takaful institution shall retain a reasonable percentage of the underlying risk, particularly in the case of treaty reinsurance. Because in treaty, you pass on the business, so you need to have a reasonable ratio of retention. Such retention of risk shall be in the following ranges. In normal case, preferably not less than 51, but in no case less than 33%, excluding excess of loss policies. So we are saying that for treaties and facultative, you will be keeping at least 33%, but with regard to the excess of loss policies, because those are related to risks which are in very high appetite, which need a very high risk appetite, which may not be available within Takaful. So excess of loss policies, can be are exempt from this requirement for retention requirement, because excess of loss policy means that you are retaining at least below the loss limit. So, for example, excess of loss policy, for example, in case of car is 10,000 BD plus full loss. So it means that within 10,000 BD, you are retaining the risk. So you are retaining a reasonable amount of risk. But the car value can go up to 200,000 BD, which means that normally you may not have that appetite. And normally in the larger scale, even the Takaful companies that are available may not have that appetite available. If we are talking about, a power plant, so or a dam, you may have, you may not be able to take the significant excess of loss consideration in those ones. So consider, while you can take the maintenance part. So considering these things, it is put in as a requirement. Now, putting the answer to the question raised earlier, in newly launched Takaful institutions and business lines for the first 3 years of operation, and the business lines not covered by Takaful institutions, not less than 15% in excluding excess of loss policies. So, as you mentioned, a long list of type of insurance for which Takaful cover is not available. We are saying that in those ones, because of necessity, you need to retain at least 15%, and then you can pass on. But if you say we want to pass on 100% to them, what does it mean? You become just their agent. You become just a conduit for conventional insurance, which should not be generally acceptable. So from this perspective, we have suggested these ratios, that these ratios are the ones that should be determining the basis for acquiring necessity-based conventional reinsurance. A minimum of retention need to be maintained according to these. We have a couple of more comments. Brother Shakib Mahmood, how can you go to a lower risk rated Takaful? One has to seek risk appetite, and we are not exposing the contribution to a higher risk, as a result risking continuity of Takaful. Brother Shakib, now here we have a fundamental issue. You are talking about a risk is always there. It is not that conventional insurance never fail. We have seen situations in mortgage crisis. But the point is, it is issue of halal and haram. If I go to a bank and see that bank has a lower rating, but it is halal, and I go to another bank which is haram but has a very high rating. If I go to government sukuk, I found for one government conventional bonds which are very highly rated, and I can find sukuk for another country which are not that high rated. What would be my answer? The problem is, let me be clear. We are talking about doing a business in halal way. So if there is no solution, Maybe, unfortunately, people will go to conventional insurance. But why we just want to make ourselves as a earning party between that? We don't want to actually do Islamic. We just want to take a share out of the insurance market. Is it correct? Because conventional insurance was also ceding for 100% business to the same reinsurance company. I am ceding 100% business to the same reinsurance company. But I am just going to the common participant and saying I'm doing halal. We are saying here that fundamentally, when you say that you are doing halal, then you need to demonstrate that you are having a real intention of doing a halal business. This retention means that you are doing a halal business, and to the extent of necessity, you are going to conventional, and excess of loss are all exempted. Considering that, yes, Islamic finance market is small, Takaful market is small, so excess of loss is all exempted in this. We are talking about mainly the treaty where you pass on the overall business as it is. If you find another solution, so the question is, this is risky, but this is halal. This is not less risky, but it is haram. This is not an issue of preferred and less preferred. And if it was an issue of less preferred and less preferred, then by default, why a person should come to you? Why shouldn't they go directly to the conventional insurers, conventional insurance companies? Brother Nawaz Badruddin has a question which is, I think, relevant to this one. Does the standard speak about fronting arrangements since there is exceptional situation arise such as aircraft which require huge covers, where we are compelled to provide? Brother Nawaz, I think you got the answer in this this discussion about the retention. So the excess of loss is fully exempted. Treaties, you need to keep at least a ratio. If aircraft, there is no retakaful available, then you will be in item B, which is up to 15%. For new businesses, up to 15% retention, minimum 15% retention. But in the ongoing businesses, we are talking about 33 to 51% retention. That mainly it has to be 51% to make it like, genuinely a halal transaction, but at least 33% should be appearing within the halal paradigm. However, yes, we understand there are practical problems. Yes, we would like to listen to all of you and take all the comments. But the fundamental reason for having this standard is this is a fundamental issue. Now, we know that, like, in more recent, we know that our respectable chairman of Sharia board, Sheikh Taqiyul Usmani, took a view that we should just stop that necessity element in this one. There should be no necessity. Or AAOIFI Sharia standard says that, but we know that in certain situations he mentioned about that. Reason being that the using that term necessity just as a hunch is what is happening in the market, which means that we, instead of actually first making all possible effort to go for halal, we directly revert to haram. And I can tell you, a lot of those insurance companies, reinsurance companies, in past, we have seen that some of them made their retakaful windows and some of them made their retakaful subsidiaries. And I can assure you that if they see that there is more business coming on the takaful side and they are having this pressure of losing business, they will for sure come up with the retakaful windows at least. We have comment from brother Haris Suleiman. Assalamu alaikum. I see clarification on section 16, but specifically regarding, regarding the retain a reasonable percentage. Does the term retention in this context refers to the portion of risk that the takaful company retains within its own limits and the retakaful component combined together? No, it is about the own limits part, dear brother. It's about the own part. So it means that in treaty, you pass on the remaining part, so at least you retain this one. If you have better terms and better language that you can suggest to us, please feel free for that if the wording you feel is confusing. Additionally, there are instances where when considering both the company's retention and its Takaful arrangement, the total risk retained may be less than the 51% limit stated in 16A. In order to meet the regulatory requirement outlined in 15A, the Takaful operator may need to rely on conventional reinsurance. In such cases, can this be considered an exception assessed on a case-to-case basis? It's a very good point. So you are saying that your retention plus Takaful part cover 51% in total, and for remaining 49 you go. So this is actually a good point. I think that this is a very good point actually. So what we were, the purpose was that we just wanted to make sure that predominantly it should remain halal business, and intention should not be just to work as a conduit for conventional. So we can put it as a combined condition as well. I think it's a very good suggestion that we can say that if the Takaful company on the specific fund or a specific line has a treaty, and it has a treaty with Islamic as well as a treaty with conventional, and for example, it retains 10% for itself, retains 41% for passes on 41% to the Takaful, that is Sharia compliant. So total Sharia compliant part 10% plus 41% becomes 51%, and then remaining 41%, 49% or less than 49% is passed on to conventional, because the appetite of the Takaful entity is not enough. I think, Brother Haris, you have raised a very good point, very highly appreciated. Again, I cannot commit on behalf of the Takaful Governance Committee and the board, but I think your point makes a lot of sense. So we should talk about that retention for this purpose should be considered, including, because here we were just assuming that you are passing on to conventional. But if before passing to conventional, you are partially passing to Takaful, then how this clause should apply? I think there should be either amendment in this clause or there should be explanation about this element as well. Thank you very much. The whole purpose is that we should not be just passing or taking business from the participant and passing on to conventional. That is the main purpose here. If we find a solution through partially covering through Takaful, I think that is still a good solution. Thank you very much for raising a very good point. I think it will be a very good point to be discussed in the Takaful Governance Committee and the board. Sister Zahra, I think again all the points were good, but this point might need an amendment in the standard, and it is a point. So if you take a note of this point separately in particular.
No problem, brother. Noted.
Okay. We have a point from Brother Rao Faridul Haq Khan. On what basis these thresholds under 16A and 16B are set? What if a Takaful institution code seats more than these thresholds to create more capacity for providing coverage to more Sharia compliant transactions? Okay. Brother Rao Farid, thank you very much for being with us. Thank you very much for your kind comment. So let me first put for A. A is simple. 51% means majority, which means that even in case of necessity, we maintain majority as Islamic. Excellent. 51% is understood. The second argument of 33%, that minimum 33%, there is a hadith of Nabi Karim Sallallahu Alaihi Wasallam that is with regard to inheritance and wasiya, but that is actually, that says athulus kasir, that 1/3 is significant. Which means that this is the criteria of 33%, which is applied in a lot of Sharia Islamic finance analogies like screening criteria, etc. So a lot of places AAOIFI has used 33% criteria as a valid criteria for determining something significant. So we are saying that it should be majority or significant. 33% is significant. Majority is 51%. There can be another analogy here that is 20%, which is significant from accounting perspective. 20% is considered as significant influence from accounting, and a lot of laws also provide that 20% as significant influence. So again, 20% can be a criteria. I think we discussed it in the board as well, but the decision was on taking the analogy from the Sharia side, that is 33%. Again, please keep in mind that excess of loss are not included in this one, because we understand that for the huge in the large infrastructure things, even for auto business, the excess of loss and all these things may not be within the risk appetite. So if you have an excess of loss type policy, then it will not be included in this calculation purpose. Any excess of loss policy where you retain within the loss limit, and over the loss limit you cede, that is acceptable. Now, the second part of your question, brother Rao Farid, the point is that if you say that you want to have more thresholds to provide capacity for Sharia compliant transactions, the point is you are doing one side Sharia compliant and one side Sharia non-compliant. Please keep in mind that it is an issue of halal and haram. It's not issue of preferred and less preferred. So my problem is that you say that I want to rob a bank to make donations. Would it be a good idea? I just rob a bank, maybe an Islamic bank, because you can say, okay, I'm robbing a conventional bank. But the point is, if you rob somebody and pay that amount into charity, one halal, one haram don't nullify each other. Haram remains haram. We need to understand that part. So we need to be very clear that we go for haram for the purpose of that specific necessity only. So yes, if I want to do it for merely for increasing my market share or profit, it is not permitted in the standard. If I want to actually safeguard the greater interest of participants, yes, it is allowed. But then you need to apply certain additional consideration. Again, we would love to listen more about any other possible limits. About 15%, to be honest, it was kept as half of 33%. We just made it round for 15%. It could have been 16.65% just to allow half of that. But again, 15%, we can come up with something else as well. So we would love to have more comments from you and other learned participants today with regard to other possible comments that we can have on this one about the percentages, etc. In all cases, net reinsurance premium net of any discount shall not be higher than the amount of net takaful contributions less applicable wakala fee. So this is a very important test. That net reinsurance premium net of any discount, this answers earlier question also, because commission is not allowed as per AOIFI, but a discount is allowed. So any net premium that is received should not be higher than the amount of net takaful contribution less wakala fee. So for example, I got contribution of 100. I paid the wakala fee of 30, it comes to 70. And the net retakaful contribution goes to 80, which means that I start from day one on negative. This is what is not allowed, because this is a significant governance issue that Vakil is not fulfilling his responsibility and is overcharging. Brother Farhan Farooq has another point. Assalamu alaikum. The standard should address the issue where Islamic banks require takaful companies to arrange international treaties despite the takaful company being legally allowed to retain the risk. This requirement forces takaful companies to engage with conventional insurance companies, compromising their Sharia compliance. This issue is particularly prevalent in Pakistan. Brother Farhan, I think the issue that you have raised, I have no answer to that, to be honest. It means that we just want to do Islamic finance on paper. So if Islamic banks are pushing takaful companies to do haram, then I don't know how their Sharia scholars are approving and how takaful companies are approving this. Again, excess of loss part, again, some of the coverage part might be understood as a necessity. But if they are insisting on this one, I have no words for that. But again, this might not be this might not be my my comment is that it might not be a amendment that we can do in this standard, because this is about Islamic. Okay, what we can do, that we can consider if there is a, now this is a question. I think, Brother Farhan, this way you raised a question that may need a improvement in the standard. So forget about Islamic Bank. The question is, if there is a customer that is peculiar about the reinsurance coverage, and I'm more concerned about governments, not the banks. For governments, we knew it, and that was the reason that excess of loss, all these we were talking about. So the question are, if there are customers like governments or banks who are asking for the Takaful or reinsurance coverage through through very highly rated conventional reinsurance, should you even accept that business? That is a question. So, but the point is that at times you might be forced to, you are in pressure. So I think this point need to be covered in this standard specifically, that if there is a very specific requirement of a customer, in that situation, to be honest, you just become an agent of the conventional reinsurance. My apologies. But we need to put it somewhere. Thank you very much, Brother Farhan. Again, you raised a very good point, very good suggestion. We need to consider this to be put in somewhere appropriately. Brother Nawaz Badruddin has a point. Is there any Sharia basis for deciding first 3 years as allowed for newly opened Takaful companies? Thank you very much. If you suggest a better period, we would be open for that, because we wanted to allow a transition. Again, normally for the conversion of conventional business, normally Sharia boards allow 3 years as a conversion time. So that is the reason that we have kept 3 years here, and 3 years we have kept in the last section about transition as well. So considering this thing, 3 years about new business line, 3 years about new business, 3 years about overall transition, these are the things that we have kept in. But if the market participants feel that there is a better argument for less than 3 years or more than 3 years, please feel free to suggest based on your practical experience. We will highly appreciate that. Thank you very much. Use of co-takaful. Now, let me address the issue of the Oman that the Pratham Elame has raised this point. My apologies if I mispronounce any name. I have to apologize every time. A lot of people join from different parts of the world. At times, names are new or not familiar to us. So at times we mispronounce. So my apology for that if I'm mispronouncing the name. Not only this, at times even it is difficult to identify whether it's a brother or sister. So at times even that may be wrong. So apologies for that, and as a omnibus clause. Exerting all reasonable effort for the purpose of application of the principle of this standard, Takaful institution shall include use of co-takaful before resorting to conventional reinsurance. Sister Zahra, I think here the language needs a little bit improvement. Just make a note of it that paragraph 18 language need to be slightly improved. Grammatically, the language need to be slightly improved. Okay?
Yes, no issues.
So now what we are saying is that, now let me give you example. I have no limit with the Takaful, but my there is a competitor Takaful entity which has a limit available within their own retention, as well as they may have limit available with Takaful. Now what happens? Because of my business priority, I book the business and I pass it on to the conventional. Can we say that it is resorting all reasonable efforts, exerting all reasonable efforts before resorting to conventional? Our conclusion is no. The board concluded that before going to conventional, first you have to check for Takaful, but also you need to check for co-takaful. So if the co-takaful facility is available, again, you can ask them and make sure that they don't pass on to conventional insurance. But if they are retaining the risk, or if they are passing on the risk to Takaful, in that situation, it is part of all efforts that need to be exerted before moving to conventional. Just one thing to clarify, paragraph 16 about retention applies to conventional reinsurance. So if you are having Takaful, if you cede all business, no problem. So here also, if you retain the business, partially pass on to Takaful and then keep it co-Takaful, again, you have the right to ask the co-Takaful partner if they are going to pass it on to conventional insurance. If they are going to pass on to conventional insurance, you don't do it. So explanation, if other Takaful institutions in the jurisdiction have the capacity to cover a proportion of risk directly through retention or indirectly through unutilized Takaful limits available, then this option shall first be utilized. This is necessary to ensure that the purpose of availing conventional insurance is not just to increase the market share, but actually to cover the risks which are not possible to be covered under Sharia compliant modes. Party to the contract. In case of resorting to the conventional insurance, the party to the reinsurance contract shall be the PTF and not the Takaful institution. Period of coverage of conventional policies. The Takaful institution shall ensure that in all cases, the period of reinsurance arrangement shall not exceed the actual need and shall strictly be time bound. The period of coverage for conventional insurance arrangement shall correspond with the approved transition plan. Now, this is a very important point, that it's a time bound thing, which means that you must have a transition plan. Brother Imtiaz Abbas Hussain is a point. I suggest that each Islamic government should establish a Takaful company under their control and governance for easing Takaful business. Thank you very much, Brother Sayyid Imtiaz Abbas Hussain. We know that a lot of country level national reinsurance companies exist. In some countries, we are aware of it. So the main point is that we need to convince the respective governments to actually at least create an Islamic window in that one, even if they don't convert it, or to create a separate subsidiary or a separate entity for that. But even within the current system of reinsurance companies which are there at the national level, even if these are asked to be this should be pushed to create at least a Takaful window. Thank you very much. The comment is good, but again, we cannot make a suggestion to the governments here. Brother Nawaz Badruddin, I have a suggestion. If the Takaful companies can develop pool within them in the same country, it could help the companies to retain instead of going reinsurance. This will be better option while ensuring Sharia compliance. Allah bless you, Brother Nawaz Badruddin. I think our point exactly was the same here about Takaful, but I think your suggestion about having a pool here, I think we should talk about this thing, like Sister Zahra. I think this point again, we should consider that in paragraph 18, we should talk about creation of a possible pool as well. Additional consideration in case of window Takaful. A window Takaful institution shall not resort to a specific reinsurance company in order to enjoy commercial benefits through increased business by combining the insurance business of the window Takaful operation with the reinsurance business of conventional parents insurance operation. So you are just insisting on conventional because it gives you an increased business and gives you more commission and discount. And the SSB of a window Takaful institution shall exercise more prudent approach towards allowing the use of conventional insurance on the premise of necessity, considering that A, the reputational risk for window Takaful institution and the Takaful industry shall not increase by such relaxation, and in view of the requirement of paragraphs 14 to 17, a window Takaful institution shall have a reasonable retention of the Takaful risk and shall not function merely as a conduit. Treatment of transactions and balances with conventional insurance. Whereas the Takaful institution avails conventional insurance facilities, following conditions related to transactions and balances shall be met at all times. And again, I do not need to read it word by word, like it's about interest-bearing cash reserve and interest-bearing transactions. Interest should be avoided, and commission is not allowed. I think somebody raised this point. It is not allowed by Sharia standards. So we clearly said that and reinsurance commission is not allowed. However, a discount can be sought, which shall be credited to the PTF only. And surplus distribution, reinsurance surplus distribution or bonus, if there is a reinsurance surplus distribution, then it is not allowed if it is conventional. However, it may be a form of discount that is acceptable. So these are some of the points that I think I'll just skip these ones. These are general controls with regard to Sharia compliance on the transactions and balances. Then we move to the governance and control requirements. So those charged with governance, that is the board, have their own responsibility with regard to the takaful determination of necessity. So there should be a proper strategy that should be properly documented. So if you are resorting to conventional insurance, it should be according to a proper strategy framework, which should be appropriately documented. Obviously, it has to be reviewed by the Sharia board, but also to be approved by those charged with governance. And this should clarify to what extent and how they will be doing that. There should be a strategy and time-bound transition plan should be there, that if you are resorting to conventional insurance now, what is your plan to get out of it? How you want to get out of it? How do you plan it? How do you coordinate with other market players available? How you coordinate with the current reinsurance providers if they can provide Sharia compliant solutions and things like this? So we have suggested that this should be a transition plan of 3 years, but in no case more than 5 years, or as defined by the respective regulator. The management is obviously responsible for developing and accountable for implementation of these strategies, etc. The very important point is that management shall maintain and submit to SSB appropriate documentary evidence that despite reasonable efforts, it could not obtain takaful arrangement. So it should not be a verbal communication to the Sharia board, but they need to provide proper evidence with detailed documentation that why or how it could not be attained. With regard to SSB, they have to play their role on this thing. First, any necessity-based approval is to be provided by them. So having this standard in place does not mean that management can do whatever they want. Actually, management has to develop the plan, the strategy. It is to be approved by those charged with governance, that is the board or its committees. And then the Sharia board has to provide time-bound approval on a case-to-case basis. One lifetime approval from the Sharia board is not what is desired here. Now, there are some questions, and these are very interesting questions. Before concluding, they should ask, are there any regulatory requirements in this respect, and what is the effect of the same while considering necessity? How many rejections by takaful institutions can be evidenced? So is there actually a documentary evidence that takaful institution was not willing to take further risk? How much takaful coverage is rejected by the takaful institution due to rate difference or unsatisfactory rating? What data and analysis are available with regard to market factors, like what others are doing, how much coverage they have? Have all possible avenues been evaluated, including an assessment of peers' approach? What is the process of assessment of necessity at the industry level? What efforts are not exerted or avenues not evaluated considering the cost or other commercial considerations? How it can be evidenced that the retention of risk beyond those proposed by the management is not practicable, feasible? And to what extent is the transition plan being adhered to? SSB of a takaful institution shall not be influenced by the exaggerated threat of loss contingency. Those who want to understand this one, a lot of you I can see must have been part of the public hearings on the Sharia decision-making process standard. This is one of the best standards that we have developed that improves the process of Sharia decision-making. So you can refer to that standard to understand the issue of exaggerated threat of loss tendency and its practical examples. Then we have periodic reviews and renewals, and the takaful institution shall ensure that conventional insurance arrangements are reviewed periodically at a minimum annually by Sister Zahra, I think before
Yes.
TCWG, that is unnecessary because it's those charged with governance.
No problem. We'll delete it, yes.
Yeah, by that, before TCWG, that should not be there. And if it is used anywhere, please remove it. But before SSB, yes, it will be.
Yes, noted, brother.
Of the takaful, in order to ensure that all factors considered earlier are still relevant. So the point is there has to be an annual, at least annual, at max annual. Otherwise, before that, you need to do a periodic review of this thing. Then there are transparency and disclosure requirements, that adequate disclosure to all relevant stakeholders, generally through disclosure in the annual report unless otherwise required by RSA, with regard to extent of use of conventional insurance arrangement as well as the transition plan to eliminate the same. And the SSB of a Takaful institution shall include a specific opinion in its annual report with regard to the extent of use of conventional insurance arrangement under the necessity assertion and its comments on the transition plan being executed by the management to eliminate the same. So Sharia board will not give a clean report or will not remain silent if Takaful entity is taking conventional insurance. So just standing up and saying it's all halal while a significant amount of business is being passed on to conventional insurance is not appropriate and it is not transparent. Sharia board need to mention, okay, Sharia board can still say that it is overall halal because it is used based on necessity. So we are not saying that their overall opinion will become haram. No, because they have themselves given a necessity approval. But personally, I as a participant, if I know that I go to ABC company, which retains my risk and does not pass on to conventional and passes on only partially to Takaful, versus B company, which is passing on to conventional, as an individual, I should have a right to know about it because my personal priority of Sharia compliance should not be jeopardized by hiding the facts. So the financial report, annual report should have appropriate data about it, and Sharia board should also clearly mention that what is their view about this process and what is their view about the implementation of this one. The effective date is suggested to be 1 January 2027. We are planning to finalize this standard within this year 2025, which means that there should be reasonable time of at least 1 year before the standard becomes applicable. And there will be a transition plan that is that with regard to the retention of risk, particularly a transition approach of up to 3 years may be followed in line with the requirements of the standard. So if the retention today is not meeting the criteria, so at least a three years time from 1st January 2027, 3 years time may be allowed to reach that retention level. So this is it for the standard. Let me quickly see other comments. If we have, we can see 2 comments. Brother Nawaz Uddin. A suggestion, it is better that the standard can elaborate the coverage underlying point of view, since there are gray areas in terms of co-insurance, especially dealing with other insurance players. Brother Nawaz, thank you very much for your very good comment. Can you suggest the wording that we should be, the pointers that you should be considering? So we'll take them to the committee and to the board and see. So if you can send them now, or you can send them by writing. All the comments that are not provided today can be provided through email at governance@aoifi.com. Brother Nawaz Badruddin has another comment. In my humble opinion is it is better this Sharia review should be captured in the annual planning and part of the agenda should be added in the standard. Thank you very much. We will suggest this thing to be improved in the standard with regard to the responsibilities of the Sharia board. And also we can mention with the responsibility of the internal Sharia audit or other internal Sharia functions. Just Brother Nawaz, if you can clarify that here you are talking about Sharia review as part of the Sharia board responsibility, or you're talking about the external Sharia auditor? Brother Mustafa Al Mahmood, Assalamu alaikum and welcome, brother. Regarding the profit commission received from the conventional insurance, what if the conventional insurer has established a separate pool for Takaful company and didn't share investment profits, but only a certain percentage of surplus achieved by the low loss ratio? Brother Mustafa, I think it's a good point. So the question is, when they created this separate pool, is it in form of the window Takaful, or it is only within conventional? If it is within conventional, the point is surplus we can talk about, but commission, commission technically is for getting the business. So you are getting commission for a haram business, and that's why AAOIFI Sharia standard and this standard do not prefer commission to be acceptable from Sharia standpoint, although you can have a discount in premiums. So that was the reason that that commission was not considered. Same was the reason that surplus was not considered. But if you can clarify, brother, your point with regard to the whether you are talking about this separate pool based on Takaful principles or this separate pool is still based on conventional. So if this separate pool is on Takaful principle, then even a commission out of it and even a surplus distribution out of it will be perfectly all right. But if that separate pool is not in form of a Takaful window, which means that they create a documentation of Takaful window and they have a agreement, not like conventional reinsurance, but like a re-Takaful, in those situations, it may be acceptable. We do not want to go into Sharia compliance of the Takaful window now. If they have a Takaful window, they have a Sharia board, we will accept as it is. So as if you see paragraph 4, I think that was there, that we don't go in detail about that. We will just accept it as to be acceptable. So from that perspective, I think it is possible. But any further, clarification you can provide, please, it will be highly appreciated with regard to the separate pool that you are talking about, whether being a Sharia compliant window Takaful pool or a okay, based on conventional. Okay, brother Mustafa has responded based on conventional. Brother, honestly, then it is the issue of Sharia scholars to decide. Again, this standard is not there to establish Sharia principles. This standard is there to elaborate Sharia principles and make them practically applied. That is the difference between this standard versus the Sharia standard, which addresses reinsurance. So from that standpoint, brother, I would leave it purely to the Sharia standard and the respective Sharia board. If the Sharia standard is silent, then to the respective Sharia board. But I think that, Sister Zahra, we can take this comment as a question and we can discuss with the Sharia committee at least.
No problem, brother. Noted.
Brother Nawaz, your comments will be highly anticipated. Inshallah, we can understand these will be quite helpful. Inshallah, thank you very much for being with us today. You were talking about internal Sharia review, so I think yes, we can talk about Sister Zahra. I think we should talk about the responsibility of other governance organs like Sharia, internal Sharia audit function, Sharia governance function, Sharia compliance function, etc. How they address this issue, we need to address that part as well. Thank you very much, Brother Nawaz. We have a comment, general comment from Brother Rauf Faridul Haq Khan. I have a fundamental issue with this standard. I do appreciate where the Takaful operators are available that meet the relevant rating requirements. Takaful operators should prefer using such Takaful operators. However, such requirements are not met. How it is reasonable requiring a Takaful operator to meet certain requirements in case they wish to cede part of their exposure to conventional insurers, particularly when the original underlying transaction is Sharia compliant. This might fall equivalent to saying that Muslim cannot do business with non-Muslims. Just as an opinion, I stand corrected. Brother Rauf Faridul Haq, it is not about not doing business with non-Muslim. So if I do a business with non-Muslim, but that is a halal business, that is permissible. And even I cannot do a business with a Muslim which is haram. So even me and you being Muslims cannot have haram transaction between us, like we cannot have interest-bearing transaction between us. So it is the issue of halal and haram. Now, point is that here you are taking one leg of the transaction as halal, but the ecosystem includes the haram second leg also. And that is where we are saying that the second leg, which is haram, should be limited to the extent of necessity, and these governance standard, these governance requirements and controls are there just to establish that haram element is within the necessity paradigm. Otherwise, it is haram. So it is not the issue of doing business with non-Muslims. Even if there is a halal, there is a, for example, in Pakistan, there is Pakistan Reinsurance Company Limited, which is doing haram business. So issue is not doing with the individual or a company which is owned by Muslims. The problem is what is the nature of the transaction itself. Now, I have repeated this thing several times. It is not the issue of less preferred and more preferred. It is the issue of halal and haram, which is the reason that we have taken maybe a bit stronger stance in some of the places just to make sure that we, as Takaful companies, Takaful operators, Takaful industry as a whole, do not just become a conduit for the conventional reinsurance. And I can assure you, you start implementing the standard, the capacity will come up, inshallah. It's always a chicken and egg situation, and both things go side by side. Brother Farhan Farooq, while this standard is primarily intended for Takaful companies, but it can also address Takaful beneficiaries such as banks, government agencies, and high demanding clients. It specifically advises these participants to consider alternative solution rather than insisting on international Takaful treaties that are not available, which may lead to arranging conventional insurance. Thank you very much, Brother Farhan. I think we need to add a section or some comments about the participants' role and their pressure if they are exerting any pressure on the company. So I think we have taken a note of this point and we'll be discussing it with the committee and with the board. So with that, I think I have completed, and it is 3 p.m. Bahrain time, so time is almost over. If there is any question, I can quickly try to take that question. Otherwise, I think I need to stop sharing now. So I cannot see any other question coming up till now. There are, again, I can see a lot of things in the chat window, but honestly, I haven't been able to review that. That is always my request. Sisters, the important point in chat window, you can keep it for record purposes.
No
So
problem. It's already recorded.
Okay. So then thank you, everybody. And I will hand over back to Sister Zahra for closing remarks.
Yes, thank you, Brother Amr, for the presentation and for answering all the questions. For the participants, thank you for staying with us for 2 hours, for your comments, for your valuable feedback. Inshallah, we will hold 2 additional public hearings, so please join us. We will post the details in our website and social media platforms. We also thank the partner, and if you have any additional comments, feel free to share with us on governance@aoifi.com. May Allah accept your fasting and good deeds and prayers. Fi amanillah. Thank you.